Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Traders, I hope you are ready because today's 4 Black Star events are going to create some fantastic trading opportunities within the market. Kicking things off at 9 a.m. South African Standard Time is the claimant count change report coming out of Great Britain. Later this afternoon at 2:30 South African Standard Time, we have the CPI month-on-month, core CPI and CPI year-on-year being released out of the USA. Please take note that it is at 2:30 and not 3:30 as daylight savings has taken place.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar weakened as markets bet that the Federal Reserve will slow, if not halt, its raising of interest rates to curb inflation after US authorities moved to limit the fallout of the sudden collapse of Silicon Valley Bank. President Joe Biden said that the administration's swift action to ensure depositors can access their funds in Silicon Valley Bank and Signature Bank should give Americans confidence that the US banking system was safe. The dollar fell, with the dollar index sliding 0.59% as short-dated treasury yields tumbled and reduced, a major driver of the US currency's recent strength. The 2-year note yield plunged 57.2 basis points to 4.016%. In the biggest one-day drop since Black Monday's stock market crash in 1987. Goldman Sachs, among other banks, also said it no longer expects the Fed to deliver a rate hike at the end of its 2-day policy meeting on March 22nd. Having a look at our analysis on GBP USD, we can see that we are currently still hovering within that primary resistance level around that 1.215 level. Should we break this specific resistance level and close around that 1.22 level, we could see this specific pair rally all the way to that next primary resistance level at 1.24. Should we, however, break and close back below this resistance level around that 1.211 level, we can see this potentially decrease back to that next primary support level at 1.19. Now let's move over and see what's making headlines on Wall Street. US indices finished the session in a mixed fashion as Federal Reserve policymakers scrambled to contain a growing financial crisis, moving to seize Signature Bank ahead of closely watched inflation data set to be released later today. The Dow Jones and S&P 500 added 0.3% apiece, while Nasdaq 100 lifted 0.1%. Additionally, Asian shares market slid this morning, with Japan's financial stocks leading losses as fear of a US banking crisis gripped. The fallout from the collapse of Signature Bank widened overnight despite government's efforts to shore up confidence, heavily selling of US regional bank stocks, and traders raced headlong from bets on US rate hikes, reckoning the Fed would now have to think twice. Having a look at our analysis on US 30 or Dow Jones Industrial Average, we can see here that we are hovering currently just inside of that primary support level around that 31,900 level. Should we break above the support level and close around that 32,000 level, we could see this specific instrument rally to that next primary resistance level. However, should we break the support level and close around that 31,800 level, this specific instrument could sell all the way back down to our next primary support level at 31,200. Now let's move over to commodities. Oil prices fell over 2% in volatile trading as the collapse of US banks roiled equity markets and raised fears of a fresh financial crisis. But a recovery in Chinese demand provided support. Brent crude futures settled down $2.01 or 2.4% to $80.77. The global benchmark earlier fell to a session low of $78.34, its lowest price since early January. WTI crude futures dropped $1.88 or 2.5% to $70.80 a barrel. It declined to $72.30 a barrel, its lowest price since December last year. Having a look at our analysis on crude oil at the moment, we can see that this is still in an extremely bearish trend. After breaking that primary resistance level yesterday, should we close below that $73.70 to a barrel level today on this specific instrument, we could see this sell all the way back down to retest that support level of $72 a barrel again. Gold prices shot up to a near 6-week high as concerns over US banking crisis saw investors scramble for more traditional safe havens. Prices of the yellow metal rallied over $100 in the past 5 days, as the shutdown of 3 US banks, most notably Silicon Valley Bank, underscored the growing cracks in the US economy caused by a sharp rise in interest rates over the past year. Having a look at our analysis on gold, we are currently still hovering around that 1903 level. This is also our primary resistance level. Should we close below this specific resistance level, we could see this specific instrument go back down to retest that dynamic support level at 1895. Should we, however, close back above this primary resistance level, we could see a potential rally all the way up to our next primary resistance level today at 1950. This could also be aided by the inflation data being released later today.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the Plessis be with you. Cheers.